In the last year of 2020, when so many people lost their jobs, so many people had their pay cuts in their salaries, the rich got richer. They gained over $2 trillion in the year of 2020. And how did this happen? You might be wondering that as well, right? Hey everyone, I'm Ishan Sharma, and in this video, I'll be talking about how is it that the rich keep getting richer when most people are losing their jobs? How is it that the top of the top are only adding to their net worth? And in this video, I'll be talking about the 5 rules that you need to understand of the rich, the 5 rules that you need to understand of building wealth. I have read this book called as Rich Dad Poor Dad. I have also listened to this podcast by Naval Ravikant on how to get rich, and I have also had the experience of talking with some amazing people from around the world. So I'll be sharing my own experiences from all of this. Let's get started with the first rule, but before that, make sure that you hit the like button, subscribe to this channel. And the first rule would be the fact that they earn with their mind and not with their time. Let's say I make a book. Okay, I write a book about my experiences about something. Let's say I write a book on entrepreneurship. Let's say I write a book on networking, something like that. And I get to sell that book to people out there. There is no limit to how many books I can sell. Now this is where I am using my mind to make me more money, right? I am not going into a job. I'm not gaining linear returns. I am getting exponential returns. This exponential returns concept is what you need to understand whenever you want to understand about how the wealthy are thinking about providing value and also gaining value in return. This is the concept of creating businesses, of having your equity in a business, of having passive streams of income that will generate returns even when you are not working on that. Okay, a very simple example I will give you. I was not working on my YouTube channel today. I didn't put a single video on my YouTube channel and I was doing other work. I still made about $100 from the YouTube channel itself through AdSense, through other sources. One more example, let's say you put in 100 hours and you build a fantastic course that can help people to getting their jobs, to getting started with their journey into their careers. Now you can theoretically sell that course to infinite number of people. There is no cap that you have. Let's say you're working at a company, you get paid around 75,000 rupees every single month. That might seem really good, but that would mean that you have linear returns. Okay, 75,000 rupees every single month, that would be about 9 lakhs every single year. That is a cap that you have, that you cannot make as more than that. Sure, you can have some bonuses, but it would still not be that exponential rise that you can have if you have a business that you are working on, if you have ways to scale whatever work you're doing and the impact that you are creating. Also, I have been talking a lot about freelancing, and you need to understand that if you keep charging per hour rates, you will lose in the long term, because let's say you charge $20 per hour. How much can you actually make? You will always have a limit. You will always have a cap that you can only get to X amount of revenue in a particular year. Let's say you're working on a software, let's say you're working on a business, the possibilities here are endless. It only depends upon you. How well are you executing on it? Number 2 is going to be the fact that they invest into assets and then they wait for the long term. They are a lot more about building their wealth over the long term. A lot of people right now are trying to find that get rich quick scheme, that crypto coin that can get them 100x returns, while most of the richest people out there, they are just in it for small gains but consistent gains over a long period of time. And when I say long period, I mean like 10 years, 20, 30 years. But the more important concept that you need to understand is the concept of compounding. Basically what happens is that, let's say you have 100 rupees, you invest that 100 rupees into, let's say, a simple index fund, and it gets about 10% returns every single year. 100, 110, and then that 110 gets another 10% increment. So now it makes you 121 rupees, and then it gets another 10%. So what is basically happening is that your money makes you more money, which then makes you even more money, and then that just keeps continuing. And that's how you end up with a compounding curve. Now the best part is that you don't need to have a lot of money to get started. It's a lot better when you are investing small amounts of money when you are young versus investing a lot of money when you are older. Let's say you are at 30, 35, 40. That is when most people start their investing journey. I personally like to use small case. Small case is nothing but a basket of assets. Assets could be commodities like gold. It could be equity like a stock of a business. Now one small case that I personally invest in is going to be equity and gold. The best part about equity and gold is that you are investing both in stocks and you're also investing in gold. The way it works is that it has a 70 to 30 ratio. 70% of whatever you invest goes into equity, goes into an index ETF, that is the Nifty ETF. It is basically tracking the index price of the Nifty 50 index. So you're basically betting on India's biggest businesses doing well over the long term. Okay, and then you normally invest into gold. Now the best part is that you can get started with just 200 rupees. All you have to do is to link your Demat account with the small case app. The link to small case app will be in the description. Then you can start investing into the equity and gold small case. You can also do an SIP in which you are just investing 200 rupees every single month or more if you would like to. Now that is the small case app. You can check out the link in the description if you want to get started with your investment journey. And this is the concept of compounding. Warren Buffett started investing at the age of 11. If he had started investing at the age of 30, he would now be sitting at only $11 million. That might seem a lot, but right now his net worth is about $80 billion when I last checked. So you need to understand the concept of compounding. The earlier you can start, the better it would be for you. Now let's move on to the third rule that you need to understand of the wealthy, and that is the fact that they invest into assets and not in liabilities. I got this phone that I'm recording this video with back in July of 2020. It cost me around 18,000 rupees. To most people, the phone will not make them more money, right? But what I did is that I started my own YouTube channel. I started making videos using this phone, and so it has paid off incredibly well, and this is what I call asset that actually pays me back. You should totally check out this book called as The Rich Dad Poor Dad by Robert T. Kiyosaki. Has an excellent explanation about what is an asset, what is a liability, as well as what is a cash flow quadrant. Most people think that buying a car is going to be an asset for them. You buy the car, let's say for 5 lakh rupees, you use it for 1 or 2 years, then when you try to sell it, it is going to be sold for a lot less than what you bought it for. So net, it was a negative gain that you get from that. A great example of a car being used as an asset would be when you buy the car and then you give it off to someone for rent, right? A lot of companies are there that allow you to do that. One more very simple example is when you buy a house and then you put it up for rent. So then what happens is that, let's say you have X amount of EMI that you're paying every single month for the loan that you have taken for the house, and then you give it out for rent. Then what that means is that you have Y rent coming from your house. Then you can sort of try to nullify the EMI that you are paying. And then over the long term, the value of the house will also increase. So net is going to be a great way for you to build your wealth using real estate. Now let's move on to the fourth rule that you need to understand of the wealthy. And this I will tell you, but before that, make sure that you hit the like button and subscribe to this channel. It would mean a lot to me, so please do that right now. Fourth rule that you need to understand is the power of scalability, is the power of using leverage to your advantage. So very simple example I will give you, that is the leverage of software. Okay, you build a platform, you build a SaaS platform that people can use around the world, and theoretically there is no limit to how many people can use it. That will give you tremendous advantage. Leverage through software is the best form of leverage. The other two forms of leverage and scale that you can get is with the help of capital as well as with the form of labor. This is the power of scale. Why is it that Jeff Bezos is the richest in the world? Because he has something that is used by millions of people every single day, and that is why he has the advantage of scale, and that is why his company is worth so much. Let's move on to the fifth habit that you need to understand of the wealthy, and this is going to be that the rich are always interested into gaining knowledge. Okay, this sounds like Tylo Pace, but it totally is true. What you need to understand is that they are a lot more interested into gaining knowledge. through podcasts, through books, through courses, through seminars, through experiences in which they would network with other people. Knowledge is powerful, and if you devote time towards it, you can learn a lot about how the world works or how a particular industry works, which then will allow you to start your own business if you understand if there is a pain point that people have. So just keep learning as much as you can. The best investment that you can make is to invest on your own self. As Warren Buffett has famously said, that's pretty much it. I hope you got to learn something from this. Let me know in the comment section what do you think about this. Which rule did you like the most? Also check out the smallcase app. I think it's a great way to start your own investment journey. I will see you all in the next video. Hit the like button, subscribe, and follow me on Instagram at Ishan Sharma 790. I share a lot of other interesting tips. Thank you for watching. I'll see you in the next one.